Greetings family, welcome back to yet another valuable video. Now in this video, I want to teach you on how to learn trading in the correct manner. That's going to save you a lot of time in your journey and fast track you instead of wasting a lot of time and information learning the wrong information. Now I've been trading for the past 9 years and I only succeeded about the 5th year when I started seeing results where I can say, oh yeah, this is where we started making money. And not just making money one time and saying, yeah, I've doubled an account. No, consistent income, right? So this is the video that you need in order to succeed. Now, uh, with every journey, before you embark on it, the first thing that you have to understand it is your why. Many people, when they get into trading, they've seen fancy lifestyles and all of that. They've been sold dreams that it's going to happen overnight in terms of they can just join now and then the next thing they're a millionaire. It's not like that. And I had to find out the very hard way in my journey of trading. So if I had the right perspective, because perspectives can shift and motivate us to have wrong motives or the right motives, and that motive can either accelerate you or make you stagnant because you'll be trying to achieve that. So having the right motive, having the right why and the right perspective, gather yourself good mentors either on YouTube, wherever. LinkedIn, it is the best place. I am myself on LinkedIn to see the best mentors or people you can imitate and that can spring up the right why or the right motive inside you. Secondly, when it comes to learning any skill, is having the right foundation. If you have the right foundation, as the Bible says, your house will not crumble. So that's exactly what you must do. When it comes to foundational learning in terms of Forex, is about learning the right fundamentals. When I mean by that, the right structure of information. Don't be trying to cram everything all at once. Learn things that are going to be necessary for you to trade. For example, foundational aspects like understanding currencies, understanding what you're going to be trading in terms of pips, lot sizes, leverage, and all of those margins. You need to understand exactly what's going to be influencing the trading. Secondly, your style of trading or your approach. Okay, so there are 3 approaches. There is technical analysis, there's fundamental analysis, then there's sentimental. Each are different and have their own strengths. Technicals, we use charts and we basically use historical data information to predict the future, okay, on the chart. Fundamentals, you're using economics and it needs one to be well versed in the understanding of global political economics, how they influence the market and take decisions of that. Most assuredly, many of you, 90% of you, will be trading technicals, which is good. Then we have sentimentals, which is basically using a mix of indicators, a mix of technical and fundamental to make trading decisions as well. So you ought to understand, and within your foundation base, many of us, we're taking a lot of things. You cannot put a lot of materials within your foundation as you would physically. You need to use the right or the same, mortar or cement and so forth, the very same thing. If you want to touch or you want to be a master of all things or master of many trading styles and technical analysis, it's going to mix you up and delay you so longer, right? So for myself, I started off just trading market structure. I went to trend lines, I went to trending trends, and I went to ITC, and I went to smart money. It's a whole lot of stuff. There's many strategies out there, many ways of approaching the market, so you just gotta stick to one. Every one of them will make you money, right, according to its own merits. There is no better strategy, there's no holy grail, there's nothing better that you're gonna find. You just gotta stick to what it makes sense to you and make sure you understand the way to maximize it. That's all. Okay, when it comes to where you can learn now, foundations like baby pips are very good. So you can just say baby pips, or even on my channel, guys, I have created a full-on playlist on understanding, the basics such as your currency pairs, pips, leverage, margin, and as well I've broken down how to understand structure and also smart money concepts, supply and demand, all of that, Khajes, I've put it on the playlist. So just look around on our channel, okay? And then secondly, Many people, once they've learned, the error they're getting into because of the wrong perspective now on number one, their why is wrong, therefore it hinders their foundation, and therefore it brings out the wrong results and everything crumbles down. Step number three there is that they don't practice. They go straight from learning to applying, want to make money right away. Give yourself enough time to trade on a demo. Why do I say this? When you trade on a demo, you're basically developing the mental memory or the mental muscle, right? That's needed for you to succeed. When it comes to learning any new thing, you have what we call neurons in your brains. And when you learn something or you hear something new, it creates a neural pathway, just a small string in your mind. But the moment you go back and back and back and practice, and it becomes part of you, it builds up a whole bridge that's so strong that it becomes part of your subconscious mind. So many, you learn something, it's still within your conscious mind, that by the time you get in on the market, you don't know what to do. You don't have the muscle memory, you don't have the habit, it's not part of you. Therefore, you can't execute it at its fullest. Your emotions are all over screaming, oh no, you're gonna lose money, oh this and this. You have not mastered it to the fullest. So being on a demo account lets you expose all of those emotions, and some of you do it even wrongly. On a demo account, backtest with money, of course, that you can afford to deposit. You can't be on a net worth of $1 or $10 or $100 and you're already trading with a 1 million capital on a demo account. It's unrealistic. So make sure you're very realistic within your backtesting, so you can get a realistic feel of how it's gonna feel when you backtest, or trade real money. Even when you start trading real funds, you don't go big. You start small on the smallest lot sizes, so that you gradually are able or trust yourself in executing trades, and you're comfortable losing money. It's the most important thing. You're comfortable losing money. You're comfortable making money. Okay, so that's very important that you understand your why. That creates the right motive. Then from the right motive, you have the right foundational learning. Then from the right foundational learning, you have the right practice. Give yourself time. Do not rush the process. If you think you're not ready, you gotta go in. Okay, number 4 or 3, I'm not sure over there, but I have a note here. Strategic development. From your why, you understand the right motive, which creates the right perspective. You learn the right foundational education. You practice, you backtest. I have an aspect that I call market biofeedback, which is allowing your mind to create a bridge between how you see the market versus how you respond to the market. When you make those meet, when you know how the market moves, you're used to this market, this is how you respond. You mastering oneself in trading is very important. When you make those two aspects meet, you're getting into what we call strategy development, or building an edge, which is very important, and many people miss it. Where people trade like headless chickens. What I mean, you trade without direction. There is speed, but no direction. So the most important thing with trading is that once you've practiced, it will give you an edge. An edge involves your trading strategy. That means you know the thought process of how you analyze markets, how you get into a trade. So from A to Z, your strategy must be laid down and clearly back tested through your practice. Secondly, you must have mastered and known how emotionally you're gonna react when certain things happen, or how you're gonna react on certain situations. So you would say A class setup, I am sure of this, this, and this, and this. You need to track. It's called market biofeedback. Okay? And then through that, you also master risk management. So you know how much you would lose when you take such trades, how much you would make when you make such trades, how to play out different market conditions, either liquidity markets, holiday markets, slow, fast, ranging markets, trending markets. It needs to be laid down to the specific point. Once that is laid out, then you understand that that will be your blueprint on how to trade. Then now you move gradually into real trading, where now you can scale up from small accounts to big accounts. And it's not about flipping accounts again, step 1 there. Your why is the most important. It's not about flipping accounts, it's about gradually growing your profits. When it comes to trading, family, it is a game of numbers. That means it's not about win or lose a trade. It's about the game of numbers. That means your risk toward ratio. That means when it comes to trading, the whole probability of trading, by the way, let me burst your bubble, is a 50-50 chance. That means it's the same way you would flip a coin and take a trade. Like imagine if you had a coin and you flipped it and wherever it landed, you say bulls or bears and you take the trade. That's the exact same way in terms of 50-50 chances. But with that 50-50 chance, remember that your edge, that's where it comes in. Your risk toward ratio, your risk management, your emotions, how you carry out yourself in the market is very much important. Have the right mentality. Now, as I promised you at the beginning, I'm going to let you build up the right perspective. Now, when it comes to trading, many of us, we get in with perspectives that we've also picked up from other professions or from schooling, from being raised by our parents. Beliefs about money can hinder us. Now, we taught in school that 80% or 90% is better to get ahead of life, and that's not the exact thing that's needed in trading. In trading is that even you have a 40 or 30% win rate, it's good, but you're gonna beat down yourself in your journey of learning. You're gonna be looking for the next shiny thing because your mind has been programmed that 80% is good. You need to win more in order to make more money. And in most cases, even when it comes to studying traders, those who have a higher win rate trading strategy tend to lose more with those who have a lower win rate trading strategy, because it's not about the power of the strategy or the accuracy, it's about the risk to ratio, the edge that is involved in trading. Billionaire traders out there would say statements like this: I lose 60% of the time. Or they would say, every time I take a trade, I'm just aiming to lose. Those are billionaire traders. You can follow them on LinkedIn, you can read books like The Market Wizards, and some of these guys are no geniuses. They don't have the highest IQs. It's not about intelligence again when it comes to trading. Again, cool it down. Surround yourself with the right people. Don't follow gurus who are just showing off cars all over, and you think, yes, it's good to aspire to drive something like this, to live in a better area, but you must know that direction is better than speed. And if everything catches your attention around you, definitely nothing will be your intention. You won't have a laid out intention. You will keep on being moved. A lot of things will play in with your dopamine. They will hike you up and you go on the markets. You will be stacking up trades. Master risk management, guys. I will beg you in all of your journey. So if you follow the steps I tell you, that's where you will actually start, you will fast track yourself. So where can you learn? Of course, as I said, baby pips. Also, I mentioned our YouTube channel here with a lot of good material on learning trading. Again, another way, of which can be a very expensive way to learn, but again, it differs with people and individuals, is paying mentorship. Get a mentor that mentors you and takes you to the next level. Again, this also can be very tricky. Getting the right individual who has the right mindset, number one, who speaks your language, who aligns with you. And someone who aligns with you, definitely that person will mentor you. I'm definitely a qualified mentor. I am a qualified coach, so I can mentor because of that background. And because of that, I'm able to scale people to where they need to be. I have a bunch of results. Maybe I can put some of them here. But yeah, mentorship can be expensive, but worth it to fast track yourself, to get yourself to that next level, yeah, compared to the freeway. So paid mentorship programs like my own, we have our website over there. I'm advertising myself in a way, but yeah, you can check it out. Otherwise, the free content is here. Okay. And also communities as well, very important. If I had a community when I started trading, I would have also gone a little bit much, building a network of people. So it's either you go the free way of learning, okay, all of these things I have taught you, or you grow in a manner that you pay for mentorship, which is much faster, or you go network marketing basically. So getting in communities that can lead you in the right direction. Okay. So thank you so much for watching this video. I was watching here my notes if you saw me watching them. But yeah, videos like this, I just like to do them in order to point people in the right direction. So you shouldn't waste your time like myself being stuck in a circle, or rather in a cycle where you're just wasting time and money. It can be a very expensive habit when it comes to trading. So make sure you are careful out there. God bless you. I will see you guys on the next